This is the MTPredictor weekly market update for August 11th. So it's been a while since I took a few weeks off there. Much needed rest there. Here's MTPredictor.us, and I'm just going to show you the last post from the weekly market update was July 21st here, and it's a next stop wave 5. And so if we look at where we are now, we can see here's the chart of the S&P here. And let's just do some analysis here. We've got a decision point sell signal coming in that tells us we've got some divergence up here, and also we have just some weekly decision point resistance in that area as well. If we right click, choose Elliott Wave Intermediate, we're just asking the software, do we have a pattern here? And of course we know we do if we've been paying attention to the weekly market update. As we saw before, we're heading into potential wave 5, and obviously we've hit that target which came in right around just above 1700. So we're in the minimum wave 5 target area there. Again, it's a situation where we could be in for a correction. The correction would be back to or the anticipated correction would be back to the wave 4 DP. And so that is on the table if, again, it's time to protect those investments that are geared to make money only when the stock market goes up. Alright, so the other target we have around this $1,800 or 1,800 level in the current contract of the S&P is the typical wave 5. And we've seen, if we go back here, most of the corrections over the last few years have begun, even going back to the March lows of 2009. Those corrections have all been in the minimum wave 5 target. Again, here's another 5 wave pattern up in the minimum wave 5 target. Again, that's where we got the correction. Another 5 wave pattern up here in minimum wave 5, and the market then corrected again as it typically does here back to, oops, if I can get this on here, back to the wave, at a minimum back to the wave 4 DP. And again, same, back here, here's our wave 4, we can take our DP. You can see this one corrected right into the that's the minimum correction we anticipate. Again, now this was interesting, and we took note in the weekly market update because this correction after this 5 wave pattern up here corrected in the typical wave 5. It went beyond minimum wave 5 into typical wave 5, and that correction was shallow. It did correct in that area, but it was shallow. It was not, did not make it back to the wave 4 DP as it typically does. Alright, so here we are. Here's our current pattern. And so again, we want to watch this area because we're in the minimum wave 5, so we certainly could correct here. And we did end the week with a red sellers candle telling us the sellers were overcoming the buyers last week. So 1680.25 would take that short with a target there at 1534 and change. Again, last time they did exceed and go into the typical wave 5. Don't quite have strength on the STF here yet. It's not into that gray band at the top. It was back here on this pullback, and that's kept that pullback kind of shallow into the wave 4. And then we anticipated the move into wave 5. It's come in there. So if we look at well, the other thing I just wanted to show, go back and take a decision point off of the prior all-time highs from 2007, just to show that we're also in this larger degree decision point resistance area here. Alright, now it's a large area here all the way up to in the current contract around 1840, but we're at the bottom of that level, and we certainly can, and we have seen in the past corrections from this level as well. Let me just switch this over to, let's look at the Dow here. And if we look at the scanner, pulling the scanner in here for all our weekly charts of the E-minis here, and you can see the nice snapshot here, all the markets, all the stock markets basically in wave 5 to the upside. And so, you know, basically all saying the same things, and that they're due for a correction. We'll see. The Dow on the weekly chart here, again, basically the same situation, and that's, you know, when things move together like this, that's the a good sign in terms of what to anticipate. Now, you can see the Dow here is just shy of its minimum wave 5 target. Now, the S&P is the boss. Obviously, it's made up of a lot more stocks than the 30 that make up the Dow index. All right. And so if the S&P is in wave 5 and resistance and is going to correct, well, then the Dow is ultimately going to follow it. But we do have a little room to the upside before it is actually in that, it's in its minimum wave 5 target. Alright, so we'll see what happens if we get another little rally, at least into the minimum wave 5 for the Dow before things roll over. Or, like I said, they could take things all the way up into typical wave 5 where they corrected last time. Alright, and that level, right around 15,007, I'll call it 720 area is the minimum target there. Closed at 15,375. Alright, and then let's just look at a kind of a tale of two cities between the stocks here. Apple, as we looked at, obviously where the stock market is making all-time highs, Apple is, you know, really struggling here. It was able to get above 450. Again, now this little weekly sell signal here in Apple. You can see the target down there around 374 and change. But again, this was a wave 5 pattern up that corrected back to the wave 4 DP. And the danger for Apple here is, and especially if the market overall does correct, is the if it can't get back above this decision point, which we call it a decision point because it's where the market needs to make a decision. It's kind of the delineating line here. If this area gives way, then it's telling us the tendency is they're going to wipe out this whole 5-wave pattern up, you know, to the downside here. And so we look for wave 1. Let me just shut that off. Cross here is off there. The look for the top of wave 1 and then the beginning of the start of the bottom of the wave 1 here, and we take our decision point off of here, and you can see I already have this level on the chart. But what it's telling us is if they can't hold this level, the decision may be then to come down to this level here. Alright, so we'll watch that in Apple. And then on the other end, you've got Google, which is at highs here. But also, if we take a look at the pattern here, Google has gone 5 waves up on its weekly chart here. And so, again, we could anticipate a correction back potentially to the wave 4 DP here, as this one did achieve the typical wave 5, and there is another maximum wave 5 target there. That would come in around 1,030. And so perhaps if the stock markets overshoot and reach their typical wave 5s, you may get another run there in Google. But as it is, you know, be careful if you are in this stock. You know, had some nice long trades to the upside on the weekly chart in the direction of the trend there, and the TS3 here. Okay, but once this has gone 5 waves up, again, the tendency is you know, it's going to correct. All right, and let's look at before we move on from talking about the stock market. This chart is courtesy of barchart.com, and we've looked at this before. But as we progress, you know, and are making new highs, you can see this is the 25-year chart of the Dow, and the broadening formation here that is in place, and that this kind of megaphone-looking pattern. is a topping pattern, and you can see as it's made those highs, the correction back to the trend line low here, higher high, which corrected even more severe to a lower low, rallied to even higher highs now, and the danger is we get a correction back to the lower lows, and that's why you probably hear people like Harry Dent and stuff calling for a Dow 6000 as they're looking at this pattern in conjunction with the other analysis they do and demographics and so forth. But anyway, we're coming out of it. You know, the trend line here still have a little more upside potentially before we hit the top of that trend line. It just depends on how quickly that happens, because obviously this trend line projects out higher and higher and higher into the future, and if things just kind of consolidate around, you know, eventually it might be 17, 18,000, you know, the top of the trend line there. So, but it's just a pattern to take note of. It is a topping pattern, and the other option here is, or another option in terms of technical analysis, is a diamond formation, and that is that this peaks out in here and then forms kind of a diamond where instead of getting these higher highs and lower lows, we start getting lower highs and higher lows, and it comes into a cone or diamond shape on the other end here. And that also is a topping pattern, which is very dangerous and is highly accurate. And when that forms and it breaks to the downside, which it typically does, is it tends to wipe out the whole rally into the diamond. And so there you'd be looking at, you know, Dow 2000 or 3000 or something. All right, but that could take, you know, 10 or 15 years to form and play out. But it's just something to take note of, just to kind of, and that's what we like to do, is kind of take a little big picture look at things in the weekly market update. So, all right, that's our stocks and stock market. Let's take a look at silver here in the weekly chart. Again, I got a lot of this stuff mapped out here. Pull this in a little bit. So again, we had this interesting pattern here with the descending triangle. Obviously that broke down, and you can see the target, you know, from the widest part of the triangle here, the projected move. But here we are at the decision point. This was a 5-wave pattern up. Again, we anticipate it should correct back to the wave 4 DP, which it did. And then we're watching this area again. If they can hold this area, then we should get some type of rally, and we'll look at the daily chart in a second here to see where that rally might come in. If this area gives way to the downside, then we're looking at the DP off of the bottom of wave 1 there, which would be here, would be the start of the wave 1 here, and this is the DP that coincides with that, and that would put us down around $10, $11 in silver. Strength on the STF to the upside, although it's it's coming off the strength band a bit. But let's look at the daily chart here, because we have seen the silver rally a bit. And again, on the daily chart here, we had this 5-wave pattern down, and so we anticipate we could get a rally back to the wave 4 DP, which is this level starting around 25, 25.50. We just got back above $20 in silver there, and we'll see if that rally continues up into that level. And then we have that market's going to have to make another decision there. If this area holds as resistance, then the trend, which was down prior, may continue down, and we may see a test or retest of these lows. But if they take it out to the upside, then again we can go back to the top of wave 1, just in the opposite direction here, and that would give us silver in to the tune of $34 to $35 an ounce. All right, so we'll see how that plays out. And then for gold, okay, here is gold on the weekly chart, and we'll just point out in terms of Elliott wave, the pattern. Actually, this is the TS3. We can see the targets on the TS3 here, and expand this a little bit. And so it exceeded the typical wave 3 target there. There's a maximum wave 3. It exceeded that. We'll look at the daily chart in a bit, but clear that off. and we'll see, this rally is similar to silver in that it's, as far as a rally, but this is a potential wave 4 on the daily chart. But this is an interesting, some interesting areas. So we know that we have these, our central banks, accumulate this gold. There have been net buyers of gold recently, and they will lease that gold, as instead of just sitting there, they earn some interest on it. So they'll lease that out to the bullion banks. There's probably 6 or 7 around the world that qualify it as these bullion banks, and they'll take this gold leased from the central banks, sell it in the market, which suppresses the prices. Use the proceeds to go and buy things like your Greek debt, where they can get a higher return and so forth. And all that is fine until one of the central banks decides they want their gold back. And this August of 2011, and a lot of people kind of laughed at the time when Hugo Chavez, Venezuela, requested they wanted to repatriate their gold. And that's when this happened. You can see, as gold was moving nicely higher here, that kind of threw a wrench into the works. That game of musical chairs. People began to think. Now, Venezuela was not, their gold doesn't amount to a hill of beans in the grand scheme of things, but that upset the apple cart, if you will. And then we come over here into January of 2013. All right, now this is where Germany requested its gold from France and the U.S. And again, we responded that it would take us 7 years to get them their gold back. And I've heard from a lot of gold dealers that said they could have Germany's gold for them in a week. But we told them it's going to take 7 years. And then you see this precipitous drop in gold, and perhaps in conjunction with the stores at the COMEX and GLD are shrinking to levels they haven't seen in 10 years, so somebody's taking delivery of all this gold. I've heard that George Soros, who's been talking down gold, his Soros fund has actually accumulated another $250 million worth of gold related investments, and the initial thought was that he had sold his GLD holdings. Well, Soros obviously is a huge investor and qualifies where he's able to actually exchange his GLD shares for physical gold, and evidently that is what he's done, and not actually sold the GLD. So he's accumulating. So interesting. And then some interesting things in the gold market happening as well. If we take a look at this chart, courtesy Zero Hedge, this gold forward offered rate, and this typically is positive, and this means that people are willing to exchange their gold for dollars or lease their gold for dollars. And but the heads up is when this, as you can see here, when it goes negative, which it has done in July, and the last time it went negative here was in 2008, around the time of the crash, stock market crash. But that has gone negative, and that means that people are no longer willing to let go of their gold or lease it out in exchange for dollars. They're holding on to it, which indicates potential demand for gold. And the other thing that's going on is the backwardation, where typically the contracts further out have more of a premium, whereas now with backwardation, people are willing to pay more to take delivery sooner rather than later, and that also may be a sign that people are not trusting that they'll be able to take delivery, down the road, and that they'd rather take delivery now. There was an issue in Europe where one of the brokers told their clients that they would not be settling their gold contracts with gold delivery, but rather cash. And so that all mixes to make this kind of an interesting market, and it's been an interesting market over the last 10, 11 years anyway. But all that's going on with the paper selling and then the demand for the physical, and this demand going from, largely from the west to the east, with China and India. In fact, China, they say, may now overtake India, as India is trying to suppressing import of gold, and folks there choosing then, in light of that, to actually increase their silver purchases. So interesting times here, and interesting place where we are in terms of the stock market and where gold is, and silver, if you want to throw silver in there as well. So we'll keep an eye on all these things. If we want to just take, I think I've got the dollar index up here as well. Obviously, we've seen some selling in the dollar off the nice low there. That was a significant low, pointed out by the decision point there, and then we basically achieved the target here. And let's just take a decision point off at this level. And so we've got new resistance there, your next support. And again, this is kind of in a not a real clear pattern at this point. But there's your next support there in the dollar, around 80 and change. And then maybe finally just take a look at the euro. Where's my Forex? I'm going to look at the euro US dollar here. So obviously, as the dollar has been selling off, the euro has been rallying. Again, it'll have some minor resistance up here at 135. This sell signal is, you could still be short this, and we'll see, how this plays out when these things find the dollar finds some support, this euro finds some resistance. You had this kind of head and shoulders pattern here with your head and your left and right shoulders here. You could draw that trend line, but they have not broken that neckline yet either. But if that neckline does break, then wouldn't be surprised to see that target here. But so we'll keep following that as the days go by here. Anyway, a little bit of an extended session, but we've been away for a while, so nice to see that the markets unfolded as anticipated into those wave 5 highs, and we'll see where we go from here. All right, so enjoy your trading week. We'll see you back next week.